This week, I made $8,000 trading this simple 1-minute trading strategy, and it was a lot of micro scalping. I'm going to explain to you exactly how I did it, how I found my levels, and how you can apply this to your trading every single day. I'm also going to break this video down in 3 overall segments, showing you the strategy, understanding the process behind the strategy as far as timeframes, knowing your setups, and then knowing the percent chances of what you're doing and how you actually have to trust that process, and then the back end of being the mentality, and then kind of the issues that can arise with the strategy as well that you have to be aware of. Let's not waste any more time. Let's get to work. Now, the first thing I want to do is overall show proof of what I'm doing and why I'm doing it. Now, number one, you always see me recommend my fund of futures. This is who I use. These are my larger 150K accounts. Top step, I use the 50K accounts. I'll go more into why, especially on Twitter. But anyways, so you can see here on the week, this is just since the 9th. It was my birthday. We had Thanksgiving, so I wasn't doing a lot of futures trading previous weeks there, especially my large accounts. But you can see over this short period of time, like the trades have been crazy, like super small scalps, etc. Now, Top Step doesn't give you as clean of a look as this. It gives you a good look, but it's not, in my opinion, as clean. You go over to Top Step. So it says I have 3 accounts, and again, I've been practicing with Top Step X, and I like having a separate base, just to let you know, like I like having Trade Evade on one side and Top Step X, just so I know the difference, right? Helps me mentally. And I also wanted to test out a lot of questions on this. And so I've been testing on Top Step. Trades are drastically different here, right? They're still scalps, but what I will say is, like, you can see, like, it's not nearly as big of moves as my larger account. So I'm just trying to get this positioned, right? And these accounts, I just got refunded again as well. So this really just started back on the 9th because right before the holidays, had a little bit of a hiccup on my Top Step accounts. I withdrew a lot of my money from there. I had a really small limit to lose on there, if you know, on the Top Step live accounts. So I withdrew like almost all my money. But anyways, still fine, back to funded. And again, this is just in a 3-day period. I want to let you know, this isn't even a 5-day period. This is 3 days. We're sitting at 1,800 on profits on 4 accounts. And then I have another account, again, Top Step. Again, this is being transparent. Top Step's following your trades caused some hiccups. It did cause some hiccups there, and I'm not enthusiastic about it. But again, that one account's at like $800 profits. The other ones are at $1,900. So I really am up closer to like $9,000, but whatever. That's where we're at right now. Wanted to show you that. Now, I'm going to go into the trading strategy, everything I'm looking at there, but I wanted to make sure we understand what I'm using. I prefer my funded futures first. They've proven time and again why. Top Step is like a very close second. I like both of them are very good though, so I wouldn't like think any of them are fraudulent. Now I'm going to go into what's happening here with the trading strategy and why we're going to be looking at it and how we're going to be attacking this. Now, before we get directly into the strategy, I want to say a few things very quickly. Okay, how I trade is very simple. I'm not using crazy ICT or all like 30 different indicators. It's pretty simple for myself. I do use a couple indicators, but ultimately this video goes back down into price action and understanding your key levels. The previous video I did, I went over like all my indicators and things like that, but you don't necessarily need to focus on those. I think understanding the levels and the underlying action is the most important factor when it comes to trading in general. Okay, so we're going to get right into it very, very simply. Now, I mentioned that I've gone over a lot of my indicators on previous videos. I'm posting a video once a week now for sure here on the channel, so you can go check those out. I encourage you to. If you have questions, also ask me. The next thing I'll say though too, if you're new here and you want to see these levels, I often post these for free on either Twitter or my main YouTube channel, like 60K followers, whatever it may be. But I'm posting a lot less on the main YouTube channel. I don't know what I'm gonna do there yet, but I post all these levels, stocks I like, everything on free on Twitter. So check it out. Again, I never want people to feel like they have to pay for a Discord. I like to offer as much free information out there as possible. Twitter's the best way. And if you guys have questions, like feel free to ask. And this is just one of like the testimonies of Discord and stuff, and just the strategy as well. Jay West, he can trade on his own at this point. He just like likes the community now, but he made over 500K this year. Like, that's incredible in my opinion. So proof that this stuff works. Now let's jump into it. So what we're going to do, and I always recommend a top-down approach, but for this instance, right, of approaching, I'm going to teach you how to approach the day, right, from scratch, right? So really quick, we're just going to eliminate our levels here. And I'm going to show you going into this week what I would be doing. Now, again, volume is awesome. We're going to hide that right there. Not going to use really any indicators here. Ideally, what you want to do is you want to start from a higher overall time frame. That is your best friend. So we want to do 4 hour, 1 day, whatever it may be, right? So again, we're going to mark out our highs here, swing highs, etc. for our breakout points, everything like that. And again, people are like, Tyler, this is so simple. Why do we do this? Yada, yada, yada. Again, you'll notice immediately how well these things really play out. 770, I remember that one from this whole week. 21.77, and that was basically it. I mean, obviously your all-time high up here, and then you can go back to I don't like going to the 1 hour, 2 hour unless you really have to, but you can see those are really all the levels you need. And you can zoom back out to and see these other levels here. You can also see their previous high right there, which you came into, and then you can go there as well. And really, you can, some of these too, if you start getting a little bit of a wick off those, again, if you're not as confident in your levels, make a zone, right? People are like, well, what if I get out too early? Okay, I'm sorry if you get out 15 points too early on a 70-point move. Like, what are you talking about? Like, let's be real, right? So again, that's all I did. That's all I'm doing to prepare so far for this week. Now, if we start breaking down further, obviously I'll adapt and make more and go over the more levels. You know, we still have levels down here, but I'm only really concerned with where we're at right now. Now, going into this week specifically, you have to kind of pretend like, again, so let's go to the replay tool here. We're just going to replay and we'll go back, for instance, to Thursday. Okay, Thursday, Friday, whatever it may be. We'll go right here, going into Friday. Okay, so we have no levels. Let's pretend that this is all the information that we have. This is really all that we did have, right? So the only level that really wouldn't be here is this level at all-time highs at 21,908. Now, looking at key levels, how we trade them, how we attack them. I'm going to be very, very simple with what we're doing. The goal with levels is you want to find your buyers and you want to find your sellers. And that's all this really does for you, okay? That is the main premise. So what you're looking to do going into the day. Now, we automatically know our bias is towards the upside. That is going to be our bias going into a market open, whatever it may be. Thursday, we also had AVGO earnings. So when you see the gap, don't be surprised. That's what the gap was for. The old baby started crying. So again, what we're looking for. Now, we're going to start playing the action and let it go out here. But ultimately, what we like to see, again, time and time again on these charts, right? And again, I'll move down to the 1 minute for you guys as well. But all you're really looking for is breaking, mounting of levels, and moving into your next zone and understanding where the sellers are, where the buyers were, because all these levels are. Now, another big thing you're looking for too, pre-market highs, pre-market lows. Those are what we call flush points. And I might be throwing a lot of information at you, but that's what you're going to get today. So again, go to the 5 minute chart here as well, and we'll start letting it play out to see what happens here. And again, understand this is going to be going into the Asia session right here. And again, what are we looking for right now? So you're gapping up overall. What you're looking for immediately is coming back into that level here of 21.77. If you get over that level, you're looking for what? You're looking for a clean cut break, mount, and then a push back up. Now, this mount doesn't have to push all the way up. The higher the time frame of the mount, the better. Understand that, okay? Sometimes you only get a 1 minute. It may be what it is. So again, what you're looking for there is a break and mount. And so automatically what you see here is, again, why levels are so important. Again, coming right into that point right there, right into 21.77. And I know you're like, Tyler, well, you could have just drawn these levels right now. And totally could have, right? But it's important to understand, I post all of these levels as well in Discord and on Twitter, so you can go fact check me if you need to. So it's literally there every morning before market open. I always have it prepared for you. So again, check that out as well. But again, on Twitter as well, I post less, but it's still there. So again, that's what you're looking for. So what do you get? You get a reaction from sellers. This is why I'm not an active breakout trader. I look for the break and then the retest because it puts me in a larger opportunity to win. Now, ideally, what you would look for is a push back down into 21.707 off this. So breaking back down below these little lows you have there, identifying that. Again, so you start breaking back down, you look for 21.707 or we're getting the gap fill. Typically, I would look for a gap fill. Typically, especially with the futures market. And what you would really be looking for there is a break below where you kind of gapped up right there. But again, AVGO with semiconductors, and that's something you got to be really careful with, is when semis get strong, typically the whole market gets strong. And so what happens here is you start breaking back down and you trade back into 21.707. Look at that, 21.707. You start bouncing right back off the level. Again, the levels, and I just showed you how we marked them out. Previous highs, pre-market highs, etc. Right? So I really do want to fast forward a little bit into going more into the New York session here as well. Let's just let it keep playing out here for a second. But again, you see you find support and buyers. And again, this is a great rule of thumb as well. When you start finding buyers out of support, it's not always my favorite thing to do is trying to time a bottom like this. I don't prefer it. I'm going to be totally brutally honest with you guys. I do not prefer it, okay? It's not my favorite thing to do because, again, you have to kind of size for below that little swing low and you're targeting back up. And the risk reward makes sense, 2.6, right? But what I will say is size, and scale down. That is what you do here. If you're used to trading 2 minis, size down to 1 mini, right? Or go into micros and trade a quarter of your position if you want to, right? Because it's still a good setup. You still have the numbers there. But again, the two other things here is you're trading in London and Asia session, which for me, I prefer to trade New York session. It's quicker. In my opinion, it's easier. It's a lot faster as well. Again, you mark back up, and I'm just showing you where I placed all my trades were during the New York session. But again, you see all the levels get respected, and that's the most important thing here. So I really want to just zoom in a little bit further. We're getting in there to now. We're at 3 minutes, 5 minutes, or 5 a.m. When you get to here, like 8:30 a.m. And this is a really important thing before market open. You start breaking back over the levels, the pre-market levels you had right there. Again, you're still in pre-market, so worth mentioning, but that was your Asia high there before you got rejected back down. And so ideally what you would like to see is some sort of retest, ideally, or the 21.8. And so as market's coming into open, guess what? You're making new all-time highs right here on Friday morning, okay? Again, not a lot you can do there when you're making these type of levels here. And again, you come back down, worth mentioning, back down to your pre-market levels where you found sellers at. Get almost a bounce. Again, why I always tell you, if you need to, mark a zone so you don't ever, you could see what's happening there as well. You break back up, bada bing, bada boom. And then really that's what happens. You jump to the live chart. And again, you can really see what's happening there. Again, beautiful, beautiful action. And then you end up trading back down and you just respect those levels back down as well. If you're patient, you wait on the charts, you will see this time and time again. You will see the setups. You will see the reaction to the key levels. And most importantly, you'll start to understand why it's happening. Because it's not that, and again, this isn't to roast, fair value gap traders or whatever they call it. I don't know what they call it. But if something's too confusing to understand, there's probably a major, major issue. I mean, again, go back to it. Go try it for yourself. That's what I encourage you to do. Go try it for yourself on equities, on like Tesla, whatever you want to trade, right? It works across the board. But again, it's all about patience. That's the biggest thing that I'll say. It is all about patience. And you can see how you respect it here into the end of the day on Friday. You dump back down off that level. Again, time and time. And this is the 1 minute now where you can really do all your micro scalping. But that's all I did, guys. I just focused and traded these levels again and again and again. And this isn't to say, I told you so, I make more money than you. It's to just prove the point of this stuff works. And I'm trying to simplify this for most of the people out there. If you have questions, comment down below on what I'm doing here as well. Now, on top of this too, you can add in your VWAP. And I wanted to quickly use, I've been testing out the 21 EMA. I've been seeing a lot of people talking about it. I don't like it more than the 9 EMA. Okay. I like the 9 EMA more. You see how you sit closer to it on the downside for your trend to the downside on the 1 minute and the 5 minute. Do what you want. But again, I'm just testing it for people out there. People ask me questions all the time. So worth mentioning. I do listen. But again, the VWAP as well, very helpful for understanding the trend and where you're at and how you're moving. When to get bullish, when to get bearish as well. Now, it's weird that I kind of have to put this in the video, but I always see people question like things that are happening with the trading or understanding, well, this kind of wicked out this and this and this. You have to be responsible with your risk reward. You have to be able to trust the strategy. You have to be able to know it's a numbers game at the end of the day. That's what trading is. So understanding that you are going to probably lose 2 trades. Or if you're a high efficiency trader, you're trading smaller contracts like we are in this video to where we're trading, 5 to 10 point moves, you are aiming for a higher % chance of success with, lower failure rate. But if you're going more swings, you might only want to win 40% of the time and you might still make a lot of money. And there's different account setups for different things. This is obviously more on the scalping side. Let's get into it. The next thing I want to talk about here too is trusting your overall strategy and understanding the numbers game behind what's taking place here. That is the biggest thing that I think traders flop on, okay? Is we start to imagine trade setups before they happen. We start to imagine outcomes, even though we have a strategy out there. Even though we have a plan, we just ignore them, right? So I want to make this really, really clear. I don't know how tight your risk reward is, right? So for micro scalping for me, I'm looking for, reaction and then getting my move and then getting out, right? Especially with these funded accounts. This is one thing that I'll say. And one of the biggest hiccups for most people is people will highlight Tyler, some of these trades were just too small, this and that. Again, you need to understand you have to build a buffer for yourself for the balance. You have to. I don't know what else to say, especially when you're trading funded accounts. Everyone has their own strategy, whatever you may want to do. For me, I want to make my money on the first pullout and then start building a buffer immediately after that. That's what I want to do, right? So I can make my money. I'm net positive on my first ones, whatever it may be, pull up $4,000, $5,000, get a little bit more patient, get some bigger wins under my belt, get that buffer so I can start really trading there and making more money, right? Like the 150K accounts, right? Going to my funded futures, right? That's how I'm able to make more money here, right? I mean, if this was across 5 accounts, it'd have been a crazy, crazy week for me, right? It's only across 3, so it is what it is. But worth mentioning, right? Everyone's different. So I don't want to put you in a box and say you have to trade like me, you have to do what I do, because that's not true. But I want to say right now, you have to be willing to understand your strategy and what you're doing here and not getting psyched out. A great example is just right here. Now, even if you weren't trading all the way down to 21.77 off the key level here, right? And you were like, let's say your stop was, 7 points, 7, whatever it may be. I don't know what your strategy. I don't know where your key levels are. I don't know what you're looking for, right? If you're going based off of my strategy, even if I'm looking for, coming back down into these little previous highs, right? Understanding the risk reward is still in your favor. You're trading 30 points to the downside for 7 points of the upside. It's a profitable strategy, letting that play out time and time again. Some people see wicks, they get scared. You have to understand where you're at on your time frame as well. You come here and do the same strategy. Hypothetically, let's say you do the same exact trade here and here. You might get stopped out here, and then obviously you get another great setup, which would be sickening. But again, you get the little wick out here. You would still be net positive by a long shot if you took both trades. Understand that. You lost one, you won one. Very much so, net positive. Now, if you trade all the way to the downside near 21.77, you'd be even more positive. So understanding that as well, of letting trades play out and actually following through with your plan. Now, I do think there's time periods where you're taking trades and people are like, well, you can't exit a trade earlier. That's the stupidest thing I've ever heard. Things change all the time, but you can't let your emotions dictate how you're trading. You can't let your emotions say, okay, well, I just don't feel good about this anymore, right? Now, if you've already made a lot of money and you're like, okay, well, I just need to stop trading. This is dumb. I'm over trading. Those are two separate total things, okay? So understand that. But again, time and time again, I see traders, well, I had this set up, but I just, something just was wrong. That's not logic talking to you. That's just like a bad feeling in your stomach, and you might be over trading, you might be over leveraging. There might be those issues. Maybe you need to size down. Things that you have to understand there are part of the process as well. So again, I'm not going to say that key levels are going to change your life immediately. There's other things that you have to take responsibility for. But again, this week's actions, there was no reason to not be making money on this act. There was no reason. There was literally, even though you didn't get the straight up continuation throughout the whole week, you were volatile. You were moving in like a 200-point range back and forth, respecting all your levels, especially during market hours. It was a great week to trade. Fantastic. Now, again, going into this part of making your money and running, and this is the biggest thing when it comes to trading in general. A lot of these days this week, it was quick. And it was like the first hour and 30 minutes of trading futures, and I was done. Now, there are days to where you can trade multiple times throughout the day, and even in the Asian session. But this week, all of the money was made during market hours. During New York session, probably the first 2 hours of trading. And I want to highlight this. When you're having a good run, when you're having good days, you're making, if your goal is to make $500 and you make 600, be done. Stop doubling down. This isn't the casino, right? Let's jump into it. The last thing I want to go to is making your money and understanding that. I can look at these trades here and know that these aren't the prettiest trades of my top step. I can acknowledge that. I debated if I should show this or not, but I think it's important that I do. Understanding what your goals are in your moment. If you have to take 5-point trades to get in, get out, take your money, like just run, build your account up to where you need to, and then you can start trading a little bit differently, right? However you need to, right? Important to understand that. You know what the craziest part here, though? Not one loss here in the week on the top step. Not one. Not one the entire, for 3, I mean, it was only 3 days. But again, fantastic trading session there as well. Important to understand that, right? So taking your money, having your plan, having your strategy, and sticking to it. Another thing I'll point out here too is scaling out. That's another major point that I see people harp on. People like, if you're scaling out, you're really just, you're selling yourself short. You don't scale out of a stop loss. I'm like, that's a stupid mentality. Obviously, my risk reward here is greatly skewed than my stop loss, right? I'm a 7-point upside with 50 points of downside. Why would I not take half off at 25 points? I'm still in the risk reward perimeters of my strategy. So understand that as well. Scaling off, it's not a bad necessarily, like a necessary thing, right? So if you start breaking those lows, start scaling one contract out just in case. You've seen times where you break and you come back up, right? Understand that as well. Again, I think it's a bad thing when people start putting people in boxes and telling you have to do X, you have to do Y. You don't have to, right? Now, what I will say is when you're journaling and taking your notes on your trades, if you're seeing consistent losing, go look at your notes and you'll be able to identify what the problem is, right? Now, if you're always just, not taking, scaling out and you're just moving your thing to break even and you have really shitty targets, and you'll see where your issue is. It's your target. It's your overall trade plan there, right? So understand that as well. But again, don't let someone tell you have to do this, you have to do this, or even me, like say don't use ICT. It's not what I'm saying. But understand the price action of where buyers and sellers are and where liquidity is constantly pulling you in between these levels, right? Because again, the market was, I'm telling you right now, there was no reason to not profit this week. There was zero. It was one of the best weeks you've had in a while, to be totally honest. So again, what I like, what I'm looking for, how I'm attacking this. And the last thing too is understand, guys, I say this in every video, there's going to be more trades. I promise you, you might miss out on one good setup. There'll be another one. Look at this. You literally bounce up from noon from 21.68 on NASDAQ into 21.83, almost 150 points. And then you dip back down another 80 points. Constant trades throughout the week. Constant. This is the same day. It's a 2-hour time period, right? Be patient. Let the trades come to you guys. Take advantage while you can. If you have questions, comment down below. Follow on Twitter, guys. Also, you guys, if you're interested in my funded futures, the link is down below. They are going to be getting rid of some of these accounts. I'm going to let you know that right now. So the starter accounts are what I use personally. Do whatever you want. I use the 150K accounts, but the 50K accounts are really nice too. If you're just starting, I recommend the 50K and then work your way up to the 150s if you can. But again, scaling, guys, don't get crazy. Don't over leverage. Don't swing for the fences on day one, right? Understand what your goals are, your strategy, and you know yourself better than anyone. Have a good one, traders.